for the revaluation of land on 30th of June 2023. And this one is actually on the second revaluation, second or subsequent revaluation. So therefore, you need to go and check what is the result of the first revaluation before you can discuss what was the accounting treatment for second revaluation. And here you are asked to calculate the deficit, the deficit or surplus for the building for both year. For both year means this one is the first revaluation and this is the second revaluation. You need to go and calculate. And for the journal entry here, this is on the second accounting period, second financial year end, which is 30th of June 2023. So you are not asked to prepare journal for 30th of June 2021. Okay, we read the question again. So here you have the information on 30th of June 2021. 30th of June 2021 is the information on first revaluation. So I put there first revaluation, first. 30th June, the company conducted its first revaluation assessment, and these are the information given. So 1350 here is fair value 1 for land, and 2420, the one I put in pink there, is the fair value 1 for building. So there are two fair value given. One is for land, another one is for building. And that was the beginning of the end of 30th June. There's another date given here, which is on the date 30th of June 2023, where the company decided to perform another revaluation. Another revaluation here refers to the second revaluation, and this is your second revaluation. Second revaluation was done after 2 years. This is 30th of June 2021. No revaluation 2022, but there is a revaluation in 2023. And you are informed the market values result are as follows. So this is fair value 1, or fair value 2, sorry, for land. And this is fair value 2, second fair value for building. Okay, we are asked to discuss the accounting treatment for land for 2023. Even if for 2023, you still need to go and check what is the revaluation result in 2021, because under Mfrs 116, if there is a second revaluation, you cannot simply go and decide whether to debit or credit to a certain account, but you need to first go and check what is the result of the previous revaluation. So even if you are asked for June 2023, you need to go and check what is the result of the revaluation on this date, 30th of June 2021. So the first step that I did here is what I put here, where for first go and find out what is the revaluation for land. So step number 1 is for you to go and find the revaluation for land on 30th of June, on the first revaluation. So I put here step 1. Find that first. Find the first revaluation result. So if you go and find first revaluation, you first take 2.3 million, which is for land. I'm doing for land. Wait. Oh, land is at the bottom here, sorry. Land is at the bottom. So let me just bring it here. So that one is for building. Okay, at the bottom here. So this one, this is the first revaluation for land. All right. So step 1 is to do this. Find out what is the cost of the land. So the cost of the land here, I will use the blue ink here. So this one, cost. Land is not depreciated, right? So by 30th of June 2021, you will compare this cost with the first fair value. The first fair value is the one in yellow here, 1.350. So you will compare 1.5 with 1.350. No depreciation is needed for you to calculate because of the non-depreciable asset. So I still put here depreciation is nil. I put cost, which is as at 1st of January the cost here is at 1st of January 2020. So I take that cost here 1st of January, is it? No, 1st of July. So the cost here is at 1st of July. Okay, 1st of July, just make some correction. So you will find the cost is 1.5. You are interested on the first revaluation, 30th of June 2021, this one. And there is no depreciation because non-depreciable asset. You will now have the carrying amount the same, 1.5. You will compare with the first fair value 1, the yellow item here, which I also highlight yellow here. So you will compare 1.5 with 1.35, and you will see that there is a deficit of 0.15 million or 150,000. That deficit in terms of journal entry, you will go and debit. This is first revaluation, this one here. So this, you are not asked to do journal, just want you to understand better. So this is first revaluation. First revaluation. So first revaluation, debit deficit, which is in the SOPL, credit land 0.1815, which is 150,000. This is the second revaluation. So the next step is to find the second revaluation. Second revaluation. On second revaluation, step 2, you will see that it is not on 30th of June 2022, but that was on 30th of June 2023. So this is second revaluation. I've already highlighted that here. Second revaluation, 30th of June 2023. After 2 years, there was no revaluation on 1st of January, 30th of June 2022. So now you will compare that with the amount given here, which is second revaluation, land is this one. Fair value 2, 1.4. Take this 1.4, compare with 1.35. Compare that. So I was doing it here. 135, 1.4. 1.4 is fair value 2. Carrying amount on 30th of June is at fair value 1, 1.35. The difference is 0.05, which is 50,000. 50,000. 0.05 is 50,000, right? Therefore, that 50,000, if you check, this is the surplus. However, you cannot simply go and credit the surplus to the asset revaluation reserve. Under MFRS 116, the surplus, if you have that surplus on second revaluation, you must first check if there is any previously recognized deficit in the profit or loss. So in your case, you will see that the deficit that you recognize before this is the one here, 0.15. And now the surplus is 0.05, which means that the deficit should be first reversed. Here you debit, and here you are going to go and credit to reverse the deficit. So you will reverse the deficit. So reversal of deficit. And that reversal of deficit is how much? Just to the amount equal to the surplus, 0.05. And in this situation, there is no need for you to go and credit to the asset revaluation reserve. Why? Because the previous deficit is more than still having some remaining balance even after you have reversed the deficit. So you cannot go and credit to the asset revaluation reserve. You just need to go and reverse the deficit. So 0.05 million. So this is the one that you need to explain under the first requirement. Discuss the accounting treatment for land with regard to the 0.05 million. So let us look at that accounting treatment, which is for requirement number 1. Okay. So I'm going to show it here. You asked to explain the accounting treatment, right? So here on 30th of June, there is a surplus on revaluation of land amounting to 50,000. You need to first explain the surplus on revaluation of land that you have had on the second revaluation. So you, as this is, as there is, you can add here, is as there is a previous revaluation deficit, and the previous revaluation deficit was how much, right? This amount here refers to the 50,000 should be credited in the SOPL, or in other words, should be credited here, should be set off and reverse, set off and reverse in the SOPL due to the previously reported deficit. Amounted to 150,000. All right. So what you need to do is that the surplus, the previous reversion deficit, this amount here means this amount is the surplus of RM 50,000. That is the word amount referring to. This surplus of 50,000 should be credited or set off and reversed in the SOPL against the deficit amounting to 150,000. So therefore, the carrying amount of land as at 30th of June 2023 is restated to the fair value. What was the fair value? Second fair value? The second fair value is 1.4 million. Fair value of RM 1.4 million. So meaning that the carrying amount here is the carrying amount of the land to be shown where? To be shown in the statement of financial position in the SOFP. In the SOFP. As at 30th of June is restated to the fair value of 1.4 million. And the deficit was eliminated to the surplus was eliminated to the previous deficit that was charged to the profit or loss. So there is no need for you to go and explain things on accumulated depreciation whatsoever, because these are actually things which are related to the non-depreciable asset. So that was for the first one. Right. Now we go to the second part. Which is to do the journal entry for the requirement given. Let me just check what was required. Okay, first revaluation done. Now you are asked to calculate the surplus or deficit. So second question is asking you to calculate surplus or deficit on both revaluation. So to calculate the surplus or deficit on both revaluation, I just calculated it here. So you can see that this is for answer 2. So first revaluation for building, I put it side by side so that it's easy for you to compare the figure. Where do I take the figure from? So now I will use a purple. So first, the cost of the building is 2.3, which is from here. 2.3 cost, which is 1st January 2020, 1st of July, sorry, not January, 1st of July. Okay, this is 1st of July 2020. Your first revaluation is 30th of June. So this fair value is on 30th of June, 2420. So your duty is to find out what is 30th of June 2021 accumulated depreciation. So if you find out that, it would be 2.3, which is the cost, divided by 23 years. And it is just for 1 year. Why 1 year? This is from 1st of July 2020 here up until 30th of June 2021. It was just 1 year. So you will have 0.1 million. Take that 22.3 million minus 0.1. Your carrying amount 1 is 2.2 million. Remember, you asked to calculate the surplus on the first revaluation and also on the second revaluation. So compare that carrying amount 1 with the fair value 1 here. The one that I have just labeled, the one in pink, 2.42. So if you compare, you have surplus on the first revaluation, surplus of 220,000. That was 2 marks for you. When you calculate that, you get 2 marks. So there is revaluation on the first revaluation surplus. Yeah, first revaluation is a surplus. Next, we move on to the second revaluation. To the second revaluation, you are going to compare this fair value 1 because this is building. You will first put that here, 2.42, which is from here. Okay, 2.42. That is at the beginning of 1st of July 2021. And now you have the second revaluation, which is after 2 years. So second revaluation is not immediately after 1 year, but this is after two, 2 years. After 2 years, 30th of June 2023, you need to go and find accumulated depreciation first. So take this 2.42 million divided by the remaining useful life. So before this was 23 years, right? Right? So on 1st of July 2021, the remaining useful life is 22 divided by 22 and then times 2. Do that, divided by 22 and times 2, and you will get the remaining useful life here, the accumulated depreciation to be 0.22. 0.22 here means 220,000 is the accumulated depreciation. Take the carrying amount, which is the cost at the fair value, deduct with the accumulated depreciation, 2.42 minus 0.22, you will get 2.2 million. 2.2 million is the carrying amount cost minus accumulated depreciation as at 30th of June 2023 after 2 years. Compare this 2.2 with the second fair value. Second fair value, 1.97. So if you compare these two, you can see that the second revaluation was a deficit because fair value 2 is less than the carrying amount 2. So therefore, you have a deficit. You are not asked to explain, but you are asked to do the journal entry. You're not asked to explain, but you are asked to do the journal entry. So here deficit, you get the marks already, 230,000. 230,000 for the deficit. Right. So let's look at the next requirement, which is, so you got the marks, 4 marks already. Prepare the journal entries for the year ended 30th June 2023. The journal entry for the year ended 2023. So let us look at the journal entry here for the second, meaning that in the during the second revaluation, second or subsequent revaluation. But not only on second revaluation, because you are informed for the year ended, anything between 1st of January, meaning that anything between 1st of January 1st of July, sorry, anything between 1st of July 2022 up until 30th of June 2022. Okay. So every transaction that you have here happened at the end of the year, which is 30th of June. So step number one, on this date, 30th of June, you will have to go and check how much is the revaluation. So, but the first step is for you to eliminate, to provide the depreciation and to eliminate the accumulated depreciation. So before this, for your information, this is step one. Step one, which I skip in the working just to show you again. Step one is for you to calculate the depreciation as at 30th of June. So go and check how much is the depreciation as at 30th of June 2023. Before this, if you check here in my workings, you have this 2.2 million, this one. This 2.2 million is actually depreciation for 2 years, right? So if you were to find depreciation for that year only, 2023, it would be it would be how much? 220,000 is for 2 years. So if it's per year, it is 110. So in that year, depreciation is 110, 2023, meaning that 31st December 2023 23. This is the depreciation for 2023, 110. This 220,000 is depreciation from 1st of July 2021 until 30th of June 2023. This one is for 2 years. So you just want to know depreciation for the current year. So current year depreciation is only 110 for 30th June 2023. Because what we calculated here is a depreciation for 2 years. You just need to know depreciation for 1 year in 2023. So if you do that, you'll see that this is the depreciation. So you want to calculate, you can do so. Take the 220,000 divided by 2, you got 110. So do this first. And then step 2 is to go and eliminate the accumulated depreciation. This is step 2. Step 2. Eliminate the accumulated depreciation. This one is actually the one that you have in 2022 and the one that you have in 2023, meaning that the one as at 30th June 2022 up until 30th June 2023. So 2 years depreciation is what you eliminate, right? So you have 220,000. So you go and eliminate step 2. Step 3, right? Step 3 is to go and record the revaluation of the building that was a surplus. Was it a surplus? Second revaluation, let me check. Was it a surplus? Okay, so the second evaluation was a deficit. So there was a deficit of 0.23 million deficit. But if you check the previous surplus ARR balance is 0.22. So meaning to say that in the asset revaluation reserve there is 0.22 million. However, your deficit is more than the previous surplus balance. So your deficit cannot be reverse against the surplus, but the deficit also, if you can see here, just let me just show you this one. So out of this 0.22 will be you are going to go and debit to ARR. ARR of what? ARR of building. Where and another one which is 0.1. 0.1 is 0.23 minus 0.22. You get there 0.1 million. That 0.1 million, yeah, this one will be, it was a deficit, but the surplus balance is not enough to cover, so this one will be debited to SOPL. So 220,000 will be debited to asset revaluation reserve, 220,000, and the remaining 0.01 million, which is 100,000, will be debited to the SOPL. Right, so this one will be debited to the SOPL, another one will be debited to the ARR. The one that will be debited to ARR is because there is a previous balance here. So meaning that the first one here is what you do is that you debit this. You debit building. You credit ARR building, how much? ARR building 0.22 million. This is what you did here. In the first year, debit is 0.22 as well. So that is what you have in the balance. So this balance is used to offset the deficit. So let's see that here. So, so 220,000 was used to offset the, so how much is the revaluation surplus? Let me check. Okay, this one is 0.001 is 10,000, 0.22 is 220,000. The deficit is 230,000. So that is going to be debited to the ARR, 220,000. This one debited to the SOPL as revaluation deficit, 10,000. Okay, this is what we're going to do here. So this is what you do. And the next one is for you to record. So this is where you reverse the previous surplus and you record the deficit, because the revaluations deficit is not to be debited straight away to the revaluation deficit in the SOPL. You reverse the previous surplus. And the last one is, so this is step 2, this is step 3. Everything happened at the end of the year, 30th of June. All date is the same, 30th of June. And this is the last one, which is for the land. So for land, you can see land. Previously, it was a, let us see again, land. Previously, it was a deficit. And second revaluation was a surplus. So the surplus, as I mentioned, you cannot go and credit to the ARR, but you need to do the reversal of deficit. Since there was a deficit of 150,000, your surplus was 50,000. So the surplus will be credited not to the ARR but to the profit or loss under under other income. So it will be reversed. Yeah. So the profit or loss, there is a reversal of deficit. Okay, and this is the journal entry, 50,000. Okay, that was for the second question. So you are just asked to do for year June 2023. For to learn further, so you can do for 2022 as well. So I've just corrected the year end here. So the year end is